How's it going, everyone? Welcome back to the channel. This is Capital Gains 500, and today I'm going to show you guys how to use supply and demand zones for trading stock options. Here we have SPY. This is today, September the 28th, and today was a very interesting day because very bearish. Not a great outlook on the overall market because SPY took a big dump, as you can see. And what I want to start off with is this is a simple support and resistance, supply and demand zone strategy where you can buy low, sell high, buy low. So we'll start off with today. Today, what we have to do is we have to look. We don't have today, right? We're gonna pretend we don't have today's information. So looking at yesterday's price action, it's very similar to the day before's. So a lot of accumulation has happened in here, a lot of trading. But most people would then, this is like the supply and demand zone strategy that we're looking at. They would look at the lows and they would look at the highs right here. And easier said than done, right? Comes down, buy, sell. Sell, try to buy. Never came down. But if you held it, if you held it like, whoa, sell. Buy, sell. Sell, buy. Buy, sell, right? Simple support and resistance, simple supply and demand zones. So comes in, touches it, buy, go long, buy a call, sell at resistance, sell at the demand zone, at the supply zone, my bad. All right. So looking at forward, one of two things. There's a lot of accumulation. So if we go under this, there's a good possibility that this is a strong base that has developed, a lot of consolidation, and a big move can happen. Well, that's why we did get a big move. That's part of the reason why we got a big move, right? We could also even add on the day before. So actually, let's add on 3 days of this price action right here. Demand and supply. Supply at the top. Okay. Now, if we come down to today, we're starting pre-market. Whoa, first of all, we gapped down. Gapped down. Whoa. So now we have a lot of longs, a lot of people who went long stuck. What do you think they have to do in order to get stopped out? They have to sell. What do you think people who are trying to sell? Sell more so they can add to their position. Well, guess what? Right at the open, we had a nice wedge. So that's why I was able to draw this trend line, and it was forming a wedge. Once it broke, bam, a lot of selling pressure started adding up. All right, so like I said, here a lot of longs were caught, especially for the gap down. Not looking so good. If no buying pressure at the open to kind of save them for dear life. Even though we had a gap, we couldn't fill it because again, too many people were long. They had to go and close their position, adding selling pressure. Once it broke down here, all heck broke loose, and we could even use the whole supply and demand zone. This at the pre-market was the demand zone, supply zone, and unfortunately it went under it. So people who were long, even here, had to go short and sell their position to close it out. Sell. So much selling pressure. And that's why we went down. Okay, so how do you use it for today? The way you use it is now as the day goes along, you can start saying, oh, okay, we touched here quite a bit, and every time it came up here, it rejected. So this is a supply zone. This is where they're selling. So you could just draw a horizontal line, box, a zone, and then the same thing for the demand. Well, right here, every time we were coming here, they were buying it up. The problem was it was being rejected right here. So something to be cautious about. So guess what? Not great zones. Could have been identified here as resistance also. So, but then we brought it down to these new lows here. We draw our horizontal box, touched it, went up to the demand zone. Let's actually draw it in. So you can start identifying quite a bit of places. Okay, This is demand zone. Every time we come up here, we have quite a bit of selling. And then we formed this new low, touched it, whoa, sell. And now we touched it, and now we got buying pressure. And this time, you know how it kept acting as selling pressure? Buyers were able to bring it above it, so you could have gone long here, and then profit target at the resistance at the demand zone up here from earlier in the day. And so rejected right away though, right? And it literally came down all the way down again to our supply zone, touched it, and that's where we ended the day. But how could we use this, right? As the day's coming along, you kind of start to take notice where there's a lot of consolidation and quite a bit right here. You just draw it right here, right here, right here. You just draw it. Made a new low right there. Take notice of it. Okay, take notice of it. Came back up, confirms our demand zone, confirms our supply zone. And then right here, whoa, we went all the way up here. But remember, this was a demand zone, so sellers are waiting up here. So you could have waited, drew maybe something like a wedge. I like this pattern, a wedge. So let me actually draw it right there, a wedge. Draw the wedge. You can even draw it like this, you know, a wedge. Broke the wedge, go short. We're in this is a demand zone, could have been a supply zone, right? Bulls and bears fighting right here because now it's acting somewhat as support. But guess what? It went through and it went to the demand zone at the bottom. So a nice trade right here. And this is SPY. The good thing about SPY is that it's super liquid. So options, you know, you can get in and out, in and out. I would only do this trading strategy with you know, 1 or 2 contracts, especially if you're starting out, testing it out, right? Because you're gonna come here, go short, and it's like whoa, 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 oh wow. Okay, so you with 1 contract, at most 2, while you practice this strategy, and you have to kind of wait for the price action to show itself throughout the day. Here, you know, it shows itself out throughout the day. Demand, 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 go long. And right here, you can add even patterns along the side, like a wedge. Broke out of the wedge, you know, up, retested, retested, little retest, and go long. Right there, sell at the supply zone. So that's like yesterday. And then shorted around here. Again, short with 1 contract, right? Don't go crazy when you're testing it out, because it came back up. Might scare you, like, oh no, we might go higher. But guess what? Brought down all the way. And you know, this could be an easy $10 to $15 per contract. Not much, but then once you get the hang of it, you can really scale. Do 10 contracts, do 20 contracts, scalping, right? Scalp the support, the demand zone, buy 10 contracts, go long. This could have been a nice $12 to $20 move depending on how it's looking. This is a whole dollar on the S&P 500. So yeah, actually more. Now we're talking, actually I'm incorrect. This should be like $20 to $40. Again, depending on where you get in and depending on where you sell. $20 to $40 per contract. Imagine you have 10. There you go, $200 to $400. So scalping options with supply and demand zones. That's how you do it, and that's how you start doing it throughout the day. It's better done in higher time frames, but the low ones, it's like right now I'm looking at 3 minutes. That's good for scalping. 10 minutes to 30 minutes, that's good for day trades. Right here we had a lot of resistance, a lot of supply. So if you wanted to hold a day trade, right, you would sell and just kind of wait and wait and wait for it to break this one too. And it did. It gapped down, and then it really went down. But that's a really bad example, actually. For day trades, oh, you can see them a little bit cleaner here. 10 minutes, rejected, rejected, rejected. So it confirms that there's supply here. Sellers are waiting, and they really brought it down, as you can see right there at the end of the day. So that was a good trade at the end of the day. I didn't take this one because I didn't see it in time. I'm seeing it now, doing an analysis and a tutorial video on trading supply and demand zones. So if you have any questions, leave them down in the comments. And yeah, that's why I love trading options. This was Tesla, but let me show you SPY quickly. I'm going to click on a put right here on a SPY put, and this is what I mean, right? The last couple of minutes, if you would have shorted the top right here, shorted it right there, you're looking at a $1.20, $1.25, and then it went as much as $2.50. Wow, nice, especially because these are 1 day to expiry, so you have a lot of leverage right there. So that was $100 right there. If you would have really got almost the bottom and almost sold at the top, $100 within what, 40 minutes? That's nice. It's really good. So this is an awesome strategy, and you can leverage up with options, especially with the really liquid indexes. I love doing this trading strategy with SPY, QQQ, Apple, Microsoft, really highly traded stocks, Microsoft, Facebook, right? If you start doing something like Netflix, ooh, be careful with those, because that's where you get the spreads kind of hurting you. But with spreads this tight and this liquid, it's really nice to do these scalps and trades. Again, these could have been nice day trades, right? You could have bought right here, rejected, came back, retested, and went up. That's a day trade. Or a scalp is buy, sell, sell, buy, sell. Like, whoa, we're breaking above, buy, sell again. That's another scalp if you're not too sure of what was going to happen, right? So that's how you do it. Leave your questions down below, and I'll see you guys in the next one.